Welcome to the Tesla Economist. Please hit the thumbs up and remember to subscribe. You can follow me on Twitter and talk to me on Patreon. Whilst we're going through such strides of volatility, and I can see a lot of you are still buying, well done to you all, that we could discuss the stock price and environment to give us an idea of the short-term expectations we might see from the stock price in the coming weeks. Well, we just saw Tesla at lows of around $620. Well done to all of you who picked up on this dip. Let me know how low you got. I think the lowest I bought was when the stock was about $640. I also got a couple of friends invested into Tesla for the first time who were each paying mid-600s. It may feel like we're on a path to recovery now, but these are still unknown waters. We aren't sure what surprises may be thrown at us just yet. We don't know if this recovery is simply a bull trap to lure us into a false sense of security. Although I don't think those critics telling you they're waiting to get into Tesla at $400 will end up being right. I wouldn't worry too much about these people. Chances are they don't follow Tesla anything like you, so how on earth could we expect them to be some sort of prophetic Tesla investor? The people who can justify spending more time researching the stock and company are likely the ones who have the most invested. There also appears to be a correlation with people who spend all their time studying the company and the level of their conviction. Anyway, through this dip, I'm back up to 8 leaps again, although most are still not in profit yet. But that was just part of the cost of getting in. In reality, Tesla's stock price simply needs to recover about 20% from its all-time high over the next 2 years for me to break even. Personally, I like those odds, but I was still cautious in buying these options, as were likely many of you buying on this dip. The thing is, we're all probably going to be kicking ourselves pretty hard when 2024 rolls over and the stock could be in the thousands for not taking more advantage of these low prices. Well, the good news is we are into our last month of this nightmare Q2. We're hearing estimates of around 250,000 deliveries total for the quarter, but don't worry, that's pretty much been factored into the stock price. The market is forward thinking enough for that. Not so much for the 4680 potential though. Personally, I think those estimates for the quarter are a little bit low, and they aren't factoring in Tesla hitting a 2,600 a day run rate in Shanghai, let alone a rumored 2,800 vehicles a day, which alone would be close to 80,000 for the month of June. To be honest, I know it's frustrating with the lockdowns and supply issues, but witnessing what the factory is actually capable of and its full potential, in my opinion, far outweighs all these lockdowns. Some people are hearing that 3,000 a day is even a potential. But either way, I think by the end of June, Shanghai should already be approaching a 1 million a year run rate. Remember, back when Model Y factory was meant to have only a 200,000 capacity, these factories are doing twice what we expected. Funnily enough, the stock price is actually lower than when we expected that. Oh, and we didn't know about Texas or Berlin back then either. However, we're still not being told that these factories are close to capacity yet. The limiting factor was chips, but no one seems to be talking about that anymore. From what I'm hearing, the global chip supply isn't quite the issue it once was, or made out to be, although it may not be the same for legacy autos. Legacy are using old chips that no one seems to want to make anymore. For example, TSMC can make a chip for $25 with perhaps 40% margin, but the legacy autos want $6 chips with 20% margins. Do you see? It's not an overly profitable market, and the auto chip market isn't even that big a market for the chip makers to be concerned about. Anyway, just one more issue legacy autos face: catching up with the hardware as well as the software. Therefore, when it comes down to it, we are back at batteries being the limiting factor. Well, we have CATL's recent fab in China with an eventual 80 gigawatt hours a year capacity up the road. That's enough cells for 1.3 million standard range Teslas alone. Then there's this new fab that is practically next door to Giga Shanghai that CATL are building, which should only add further to Tesla's Chinese cell supply. This is, of course, in addition to the 2170 cells provided from LG for the long range and performance models. We aren't entirely sure how this Q2 will end up going once we start seeing more results. The market thinks it's all priced in, but that's really not true. The market doesn't have a clue how big the losses from the 2 new factories are going to be this quarter. It's hard to judge. I'm still trying to get my head around the best way to do it. I think I have a reasonable idea for Berlin, but I'm not even sure how much the quarter will even take for Texas. Anyway, my point is, we might not be out of the buying opportunity boat just yet. Wait until we get the Q2 earnings. Also, we can't even guarantee there won't be more lockdowns coming up. Now, it's likely that we'll receive the Q2 earnings report towards the end of July. Now, although the earnings are possibly going to be even worse than forecasted, it may not hit the stock price any further. Aside from the fact these Q2 profits are really an arbitrary number, that are not particularly indicative of much, unfortunately, except perhaps a rough idea of how much these new factories cost to run. The quarter is also going to be hit by exchange rates and Bitcoin impairments. However, some of the vehicles Tesla leased out are starting to expire, and Tesla may be selling them, which could add more to revenue. although SG&A also likely got higher with the new headquarters in Texas. It will be good getting to analyze these earnings, as it's going to give us a much better idea of some of the future numbers. Now we have this new company with over twice the capacity than before. Anyway, even if these earnings are bad, then the stock price may not even care. The stock price has its eyes on a bigger prize by this stage. When we receive the quarterly earnings report, it will likely be a week or two from the earnings report until the Tesla 2022 annual shareholder meeting. Of course, there'll be lots of exciting information packed in there, but one of the items will be voting on allowing to issue up to 20 times as many shares for the upcoming split. The split will be a psychological driver for Tesla's stock price. The anticipation alone is enough to start it running. Just the announcement of it made the stock price jump about 10%. Last split, the stock increased around 50%. There are investors or market makers that are anticipating something similar again. I'm pretty sure there is going to be a run-up in the stock price as we get closer to this date, and I'm not the only one. I was even looking at short-term options when the stock was down to cover September, hopefully for the split, but I think it's been priced in too much, although I convinced my father to get some. I'm going to play the split though. I think now is the buying opportunity and will be short-lived when the split comes into effect. I will likely sell off 2 of my leaps if they have tripled in value or so after that stage. That would give me enough to pretty much cover the entire initial cost of these leaps. Then it's possible the stock price drops again post-split. So I'll buy back up some more leaps then. However, the stock price could also do what it did last time and be a catalyst to get the stock price really moving again, possibly up into the 2000s. Personally, I don't think that will be the case this time, unless 4680s have made some drastic improvements, or unless anything else major is ever announced in the meantime, and with Tesla and Elon, you never know. I don't think this is the end of the buying opportunity. I'm not sure it will get as low as before, but likely it could dip below 700 again in the anticipation of Q2 results. I'm just saying that, in my opinion, if you're still looking to buy, then you may lose this opportunity post-split. And be honest with yourself, how much lower are you hoping for the stock price to go? Are you desperately going to wait for $650 again, which may never happen? Just think, would you be more upset if you missed out or you bought it and it dropped a further 10%? And if you're having issues deciding, then dollar cost averaging may be the strategy for you. For me, I just wanted to get in and understood that you can't always buy at the bottom. Anyway, it sounds like a lot of you are somewhat relieved the direction of the stock price has turned. It's a very funny feeling wanting to buy more of something when it's cheaper, even though you may have lost about $1 million in your portfolio to achieve that. Anyway, let me know what the lowest you bought was on the recent dip. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.